Joining us via Skype this morning, we have Chad Lippert with D.A. Davidson with this week's stock market news. Good morning, Chad. Thanks for being here with us today.
Good morning, Victoria. Good to see you this morning.
Yeah, we're definitely keeping our 6 feet this morning plus, 6 feet plus, right? All right, so let's talk about the stock market. It was much higher yesterday. So what can you tell us about that?
That's right. Big day yesterday. In fact, the biggest 3-day run in a row since 1931. So it's been a long time since we've seen 3 days like that. Yesterday, the Dow was up 1,351 points, and it closed at 22,552. And then the S&P and NASDAQ were also up between 5.5% and 6% yesterday, Victoria. Of course, what drove the market was the $2 trillion package that had been passed the night before by the Senate. And so the hopes of that doing better, even though we'd had jobless claims that had come in at a record number that same day yesterday.
And what is it that investors can expect today?
Well, this morning the futures are showing that the market is expected to open lower after that big 3-day move. So we do expect markets to open a little bit lower. Of course, everything just continues and will continue for some time to be focused on what's happening with the numbers on the coronavirus.
And so even after the past 3 days of the stock market going up, the S&P 500 is actually still down 22% from the high that it hit last month. So can you share with our viewers how the market has performed following a 25% decline?
Yeah, great question, Victoria. You know, in the last 50 years, we've had drops of 25% or more just 7 times. And the last one, of course, was back in 2008. So we haven't had a lot of these. But historically, if we've seen the market drop 25% or more, there has been good long-term returns for investors. In fact, from where we closed yesterday, after these big 3-day runs, we're still 22% below the previous high. And so to get back, as you mentioned, so to get back to that, it's actually a 29% return to get back. So if we just think historically, the S&P 500 has always gotten back to its highest peak in the past. It's always gotten back to that, and has always exceeded it. So if we believe this will be the same as it has since the beginning of the market, if we bought today and waited in 1 year, 29% return, 2 years, that would be 14.5, 3 years, 9.6, 4 years, 7.2, and if it took 5 years to get back to its all-time high, that's still a 5.8% rate of return. And so historically, if we buy during these times, it does give us good long-term rates of return.
All right. Well, thanks for breaking all that down for us. And, you know, we have a studio full of clowns here. So our pal Rob Griggs says to tell you your chair is on fire. It's just the framing. He's joking, of course. It's the framing.
It's so funny.
Well, thanks for being a good sport, Chad. We appreciate you, and have a good rest of your day and weekend.
All right. You too.
We'll be right back after this break.